Get to today's futures in focus. Crude oil rising. Texas refiners continuing their recovery from the devastation of Hurricane Harvey. Joining us from the CME to discuss, Todd Colvin of Ambrosino Brothers. Todd, we're seeing a reversal of the trade post-Harvey. Crude's up, gasoline's down. Does that pathway continue?
I think it does for the short term. I mean, if you look at what the expectations were coming into Harvey and after we got the devastation, there was a lot of uncertainty as to whether or not those refineries were going to come back online so quickly, and they have come on back so quickly, which has really pushed gasoline prices lower. The oil trade, though, I think right now is kind of stemming from a number of different variables. From a macro perspective, you've obviously got some key issues with new weather fronts moving in. You've also got rising demand out of Asia, we're hearing, and then OPEC may be looking to extend its cuts. So there is some different balls up in the air that are going to help keep oil prices bid, although I think there's a near-term ceiling close to $50 on the way.
Yeah, and that's within the range, isn't it, Todd? We've been in that 45-50 range since July the 21st. Where would you suggest we break first? To the upside of that range or to the downside of that range?
Well, I think in order to see any kind of upside breakout in oil, you're going to have to see two things. One, it's either going to come from an unforeseen geopolitical event around the world, or two, it's going to stem from a real sharp increase in demand. And right now we're starting to see demand levels rise slightly. That's not enough to see see oil prices push through 50. I think we'll likely see a move back down to the middle of that range, maybe down below 47, maybe closer to 46 before too long, if the weather conditions that we're seeing down near the Gulf subside without much more damage.
Yeah, so you're keeping an eye, obviously, on on Irma, as you stipulated. What about the dollar, Todd? I mean, we're close to those lows today. Nothing seems to be able to stop the dollar's decline in its tracks. We're looking at the Bloomberg Dollar Spot Index here, weakest since January 5th, 2015. What can stop the dollar's decline?
Well, I think, unfortunately, the only thing that could stop a dollar decline at this point is if our fearless leaders in Washington can get some budgets passed, get health care, get tax reform, the things they said they were going to do back in November. And we really have no confidence in any of that occurring. And as you mentioned, if you go back to the beginning of the year, the dollar's really done nothing but trade straight down. And that's, I think, very evident in the rally in gold that we've seen. But really, essentially, the dollar needs confidence. And right now, with a Federal Reserve that's probably leaning towards not raising rates anytime in the near future, and a government that's really kind of beside itself, the dollar really continues to struggle here.